Okay, ladies and gentlemen, welcome to our virtual classroom. We are here to present the AUE 4861 and AUE 4862. My name is Thabo Matimela. I'm the senior lecturer in auditing at the AUE 4861 and AUE 4862. Today we are gathered to talk about TAT letter 104, which is your test of controls and substantive procedures. In every meeting, there's always an agenda, and hence this is our agenda for this discussion. We'll discuss the admin issues. There's two recap analysis. I think that one will leave it for the classes, the study schools. We'll talk about the audit evidence, test of controls, substantive procedures, CATs, and at the end, question and answers. Obviously, because we are live, you can ask your questions and post your questions online. Nazir is on the other side who answer the questions that you're posting. We'll try to keep the questions live and try to answer them as live as we can, but if can't, then after the class, we'll try to answer the questions still. Remember, we still have until the 12th of June where we can answer any of the questions that you post online. As we'll do that. Just for the admin issues, the year mark. Your year mark will contribute to your final mark, about 20%, and will only be used if it's beneficial to you as the students. 2 of your best marks will be chosen. For example, if you got 50% test 1, 60% test 2, test 3 and 4, you get less marks. Remember that only the best 2 marks will choose to add to your year mark. And remember, a sub minimum of 40% for you to get an exam entrance. It's a dual requirement that we need you to obtain 40% from your year mark, a minimum of 40% for you to be able to write the exam. You are not allowed to go write the exam if you didn't get a minimum of 40%. Hence, it only makes sense. I think I'm experiencing, okay, there we go. Admin issues. Okay, where are we on the audit process? I think the screens are going on and off. We'll try to sort that out in just a second. Please hold 1 second. We'll try to sort out the issues with the screen. They're affecting me. You can put a laptop here. Please bear with us as we experience technological problems. My screens are going off. So once we get that sorted, we'll continue. Okay. All right, so it looks sorted. We can continue. Apologies for that, technological challenges. We're still trying to create this virtual classroom where it's the best of both worlds. You get an experience live, and we get to present to you wherever you are throughout the world. Okay, so where are we on the audit process? Remember, in TAT letter 102, we cover the KING, the APA, the CPC, and the Companies Act. That's at the bottom of your screen on your left. And the TAT 103, we covered preliminary engagement activities, planning, which included the risk assessments. Today, we are at TAT letter 104, which is obtaining the audit evidence and performing the audit process. TAT 105 obviously will cover the evaluation, conclusion, and reporting. That shows that we're almost at the end of our syllabus for the year. We're almost at the end of the year, hence we are TAT 104. Okay. 103, that's a repeat of the slides. Basically, it's saying that if you look at the green portion, obtain audit evidence to TAT 104, that focuses on test of controls and substantive procedures. And that obviously, the audit evidence that you obtain that you can use you can evaluate it and you can use it to conclude on your audit that you've performed, as in your audit opinion. Okay. Obviously, we looked at the risk of material misstatements at the assertion level and at the F's level. At the assertion level, obviously, if you look at the significant risk that you obtain, obviously there should be controls in place to detect those risks, to mitigate those risks, or to eliminate those risks. After you can have identified the controls that are in place, the key controls that are in place to mitigate the risk that you have identified, obviously you need to test those controls, and hence there will be assertions that go with it, and as such you can also perform substantive procedures on which to obtain audit evidence. Obviously in TAT 10 or 103, you identify the risk at the assertion level, you have identified the risk at the F's level, you've also identified the controls that should be in place. Remember, you need to link your assertions to the different risks, right? In that way, you'll be able to determine the test of control and substantive procedure that you need to perform. Okay. During your planning process, you showed your audit responses to risks. The risk at the overall financial statement level, your audit response will be your audit strategy. That will be your scope, timing, and direction, and your responses. That includes also your engaging experienced staff, lower materiality, reliance on management representation letter, professional skepticism, and the likes. With regards to the risk at the assertion level, obviously your response will be your audit plan in terms of your audit plan, your nature, time, and extent, which details your audit responses in terms of your specifics that you perform, whether you follow a substantive approach or a test of control approach. Obviously, that will be determined by your response given the risk that you've identified at the assertion level. Obviously, obtaining audit evidence, and the audit evidence that you must obtain as the auditor, you need to obtain sufficient and appropriate audit evidence. There are different types of audit evidence and the liability thereof. The procedures that you perform in order to obtain sufficient and appropriate audit evidence are in terms of your risk assessment procedures that you perform, which you have done in TAT 103, and further audit procedures that you can perform, which is what we are here to do today in tutorial 104. Your test of controls, your substantive procedures, are the further audit procedures, including the analytical procedures. Firstly, your test of controls will be testing the design and implementation of controls and testing the operating effectiveness of controls that are in place. Obviously, you need to perform, firstly, you need to identify if the controls are designed and implemented in order for you to test these controls. Hence, your testing of D&I, mostly you do that during your risk assessment process. And also your substantive procedures. Substantive procedures are your test of detail. Testing the detail within is, for example, inspecting an invoice, that's testing detail, and includes also substantive analytical procedures. You can refer to ISA 500, paragraph A14 to A25. It shows you the type of procedure they can perform in terms of inspection, observation, performance, and the likes. Just for you to know, students, there's drilling in the opposite room next door. So hence, when you hear background noise, please bear with us. There's construction happening on this building of ours. But if you do hear the background noise, please know that it's just the drilling next door. Okay, continuing with our agenda. What do we mean by sufficient and appropriate audit evidence as in ISA 500? Sufficiency means quantity, appropriateness means quality. Sufficiency is the amount of audit evidence that you need to obtain in order for you to base your opinion on. For example, sufficiency is affected by your risk. The higher the risk, the more evidence that you require. So hence the quantity of the evidence will be determined by the risk. Remember, as auditors, we follow the risk-based approach in terms of our audit. The higher the quality of evidence, the less may be required. Okay. The other one, appropriateness. What appropriateness means? It means quality. Appropriateness is affected by what? Relevance. Is your audit evidence relevant to what you're trying to address? Is your audit evidence reliable in terms of what you're trying to address? Okay. And remember, IS also talks about where the auditor obtains audit evidence himself, and where the audit evidence is outside of the entity, that audit evidence is more appropriate and more relevant, right? So, for example, if as an auditor I send out a bank confirmation letter and I get a response from the bank, that audit evidence is more reliable, more relevant than evidence which I receive from management. For example, if I discuss with management. So my audit evidence that I obtain myself outside of the entity is more reliable than audit evidence that I will obtain from management. For example, if I have a discussion with management, that's less reliable than if I get a bank confirmation letter or data circularization. Okay. In terms of objectives of TAT 104, firstly, you've got test of controls, and then you've got substantive procedures. Okay, you need to know how to formulate test of controls in terms of assessing the design and implementation of these controls and operating effectiveness of the same controls. You need to know how to discuss the concerns, formulate test of controls during the year. Remember, testing the design and implementation of controls is testing if a control is designed and implemented at a point in time and not throughout the period under audit. And testing operating effectiveness of control is testing if a control has been operating throughout the period of reliance or throughout the period under audit. Okay, substantive procedures, you need to identify the types of substantive procedures that should be performed for each business cycle, right? And you need to link each substantive procedure to assertions. Remember, currently, the move is towards testing if the students, or examining if the students are able to perform substantive procedures for a given assertion. So you need to know what are your assertions. You need to know which assertions are these. So therefore, you need to refer to ISA 315 in the basis of opinions. ISA 315, where you'll see your assertions. Okay. And there's also computer-assisted audit techniques. Remember, with computer-assisted audit techniques, it's a matter of the computer performing the substantive procedure. So the computer will replace the human being or the human face with it. So you use the computer to perform some substantive procedures. For example, recalculations. You can use a computer to recalculate. You can use a computer to obtain a sample. So as such, this is a matter of using a computer to assist you in performing your audit procedures. Okay. So with regards to set of controls, firstly, you need to obtain an understanding of the accounting cycle and the related internal controls. Firstly, if you refer to Jackson and Stent, which is the prescribed textbook, the audited notes for South African students, chapter 10 until chapter 14, chapter 10 being your revenue, chapter 11 being your expenditure, 12, 13, and 14, and the likes. So firstly, if you go to Jackson and Stent, firstly, it starts by explaining the cycles. So you need to know the cycle. For example, if we talk about revenue, how does an entity earn revenue? For example, entity earns revenue in this way. A client will walk into the building or the entity to come and place an order. Firstly, we'll perform credit checks on the client. We'll perform background checks on the client, and then we'll give a client a credit limit. We'll give a client an account and a credit limit, right? The client will then need to place an order. When they place an order, they'll fill an order form, which the order clerk will complete and sign and refer and prepare a picking slip which they send to the warehouse. So the warehouse will prepare the goods that the client has ordered. If, for example, the client is ordering, oh, we're selling computers, the client is ordering 10 computers. So the client on the order form will fill his details or her details, including their address, and they'll fill in the quantity that they want and the description of the goods that they want. So the order clerk will take the same description on the order form, fill out the picking slip, and send it to the warehouse. The picking slip is just an instruction to the warehouse to pack the particular goods that the customer has ordered. In the warehouse staff will pick the goods from the floor, pack them in the boxes, put them in a truck, prepare a dispatch note or a delivery note that will accompany the delivery of the goods to the customer. Obviously, the details on the picking slip will be key in terms of timer's delivery of the goods after ordering from the customer. For example, the customer will need to know on the delivery note the address of the customer where the goods will be delivered. So the goods will be delivered to the customer using the delivery note. When you get to the customer, you deliver the goods, the customer needs to sign the delivery note as proof of having delivered or having received the goods from us as the entity. And hence the delivery note will be another key document within the cycle. Once we've prepared the delivery note, the client has signed the delivery. It's now that the sale has taken place, the risk and rewards, or for example, the contract has taken place. The contract of sale has taken place between us and the client. The client has signed for accepting delivery of the goods. In a way, the client is now obliged or obligated to come and pay us. Our obligation in that regard is us delivering the goods to the client. When we get there, we deliver the goods. The client is now obligated to pay the entity the goods. Hence, an invoice will be prepared based on the 3 documents. And remember, there's an order form which the client filled in when they enter the entity. There's a picking slip which you send to the warehouse. There's a delivery note which the client, the customer, has signed as proof of delivery of the goods. And now we've got 3 documents which need to match. And from those 3 documents, we prepare an invoice. And the invoice, the quantity that we prepare on the invoice will be from the delivery note, right? The price on the invoice will be from the approved price list. So we need to have an approved price list that we have in place. So the quantity will be from the delivery note. The price will be from the approved price list. And then we'll recalculate the invoice, multiplying the quantity and the price, taking into account the VAT, which needs to be there on the invoice, and any discounts which need to be there. And then that way, by that time, we send the invoice to the client or the customer, and the contract has already been fulfilled in that regard. And hence, a sale has taken place. And now we can record the sale, debiting the debtor or paying cash in terms of cash sale, creating the sale. Okay. So in that regard, it's just getting a background understanding of what the cycle looks like. So we need to understand, before you can perform the test of controls or you can identify the controls in place, you need to understand the cycle itself. You need to understand the functions within the cycle. In that regard, I've just mentioned the revenue cycle in terms of sales, ordering, placing an order, delivering the goods, and having to record the transaction itself. Once that's the case, in each of the functions, you need to know what are the risks. in the ordering department, you need to know what are the risks within the ordering department. In that regard, you need to also know what are the controls to address any of those risks that you pick up in that function. Specific example, in the ordering function, what are the risks in terms of the cycle that we talk about revenue? What are the risks in ordering? For example, the customer comes in, or the customer might not have an account with us. The customer might not have a credit limit with us. The customer in that regard might not be able to pay for the goods. If you haven't performed background checks on the customer, credit checks on the customer might take goods that they're not able to pay. And hence, that's why you need to identify such risks within ordering. There's also a risk that after the customer places an order, we might take forever to deliver the goods to the customer. And the customer as such might just give up on it and then refuse when we deliver to them. If we've taken forever to deliver the goods to the customer after the customer has placed an order. So such risks are there within the ordering function. There's also dispatch function. There's also the warehouse. What are the given the warehouse? There's theft of the warehouse. There's the fact that we might take forever to deliver the goods. There's the fact that because the delivery was not completely completed by us in terms of taking all the information from the order form. For example, delivery note might not have the address of the customer. In that regard, we might not deliver the goods to the customer. We might not deliver the correct goods to the customer. We might deliver to the wrong customer the particular goods. And as such, you need to understand the given risks within each and every cycle. There's also the accounting portion of accounting for revenue. What are the risks within that? So you need to know each and every of those risks, and that obviously is Part 103. But you need to know these risks, and then you need to know what are the controls that are in place. I mentioned the ordering function. What are the risks? The risks that we might take forever to deliver the goods to the customer after the customer has placed the order. We might not perform background checks on the customer. The customer might take the goods without being able to pay us. And hence, what is the control within the ordering function? Right. Now, the control in that regard will be that the customer, or we'll need to perform background checks on the customer. We need to perform credit checks. We can perform ITC or whatnot checks that are there in the market currently. So background checks to determine if the customer is creditworthy. So you need to assess the creditworthiness of the customer before you give them an account and before you give them a credit limit. And assessing those credit limits of the customer within the ordering department before you give a customer credit limit or a credit line and a credit limit. And that way, you performing the controls which will mitigate against the customer not being able to pay you after delivery of the goods. Right, so you've got the control in place. Now that the controls are in place, remember during your risk assessment procedures, you need to perform procedures to assess if controls are designed and implemented. Right, so during your walkthrough in obtaining an understanding of the entity and its environment, you also identify some of the controls in place. I just mentioned now in the ordering function, the control being that credit checks are performed to assess the creditworthiness of the customer. Now, that's a control in the ordering function, right? Now, in terms of test of control, you need to test if that control is designed, implemented, and that the same control has been operating effectively throughout the period of reliance, right? Now, this is the portion of test of control. Obviously, if the entity says that they perform credit checks on the customer to assess the creditworthiness of the customer, you can obtain proof that the customer or the entity performs such. You can inspect a sample of customers and inspect if those customers or the credit assessments which are done on these customers, the ITC reports which the entity obtained in assessing the creditworthiness of this customer. So obtaining that and evaluating them and comparing to what the entity says. You can obtain, if they say they perform for each and every new client, you can obtain a list of the new clients that the entity has got and see if for every client the entity has performed the credit assessments, and you can obtain proof of that. So that's a test of the control. The control is what? Performing credit assessments. The test of control, obtain evidence of that. Okay, so hence we can continue in that regard. Okay, as a 330 para 8, test controls are performed because of the risk at the session level and because substantive procedures alone cannot provide sufficient and appropriate audit evidence. Right. Operating effectiveness of controls have two components. The DNI of the control, which is the design and implementation. The design means the control can prevent, can detect, correct misstatements. The implementation means that the control itself exists and it's in place. Okay, so operating effectiveness, when you're testing it, you need to test the design and implementation of the control, and you also need to test if the control has been operating effectively throughout the period of reliance, not at the point in time. For example, if the entity says they perform bank reconciliations or they perform data reconciliations on a monthly basis, you need to obtain at least 12 reconciliations. That proves that the entity or the control itself has been operating effectively throughout the period under reliance. If, for example, you obtain 11 instead of 12, that the control has not been operating effectively throughout the period of reliance, and as such, you cannot place reliance on that particular control. Okay, the test of control, the formulation of, remember the how, the what, and the why. The how, which is the verb, inspect, observe, reperform, and inquire. The what is the source document, or the reason why, and the why is the reason why you're performing that. One of the examples that we use is that inspect the clocker summary reconciliations for the manager's signature as evidence of approval. Okay, so this is how you formulate the test of control itself. Remember, at times I've been asked when we do classes throughout the country, when we go to the regions and to do these classes, that sometimes you don't need to apply all of these three requirements in terms of the how, the what, and the why, right? In terms of test of control, or for that matter. Remember, it depends as long as you've addressed the testing of the particular control. In this regard, it says that there's a summary, there's a reconciliation which is done, and also there's a manager signature as evidence of approving. So reconciliation is done, manager signs as proof of approving, or as proof of having looked at the reconciliation. So you can perform any test to test if the reconciliation is done. For example, you can obtain reconciliation and inspect that it was done. So inspect the signature of the preparer. You can also inspect the signature of the manager as proof of having approved or having reviewed this reconciliation. You can obtain the recon and inspect signatures of a manager. So obtaining the recon itself, just obtaining the recon is proof that the control is designed and implemented. But for the control to be operated effectively throughout, you also need to obtain or inspect the signature of the manager on that particular reconciliation as proof that the manager obviously reviews these reconciliations. So hence, the control itself is not just the reconciliation, it's also the manager signing as proof of reviewing, or the manager reviewing these reconciliations. Okay. So hence you need to address both these controls that are in place. So the reconciliation itself and the signature of the manager as review or as proof of review of this reconciliation. Okay, so these are the verbs that you need to use, or the key things that you need to use when you're performing a test of control, right? Or when you're formulating a test of control, or when you're describing a test of control, which is you need to use these keywords: inspect, observe, inquire, and reperform, right? So inspect, obviously, you'll inspect the document. Observe, you'll observe a control being performed. Inquire, you'll discussions with those that are performing the control. Reperform as you redoing the performances or reperforming the control that is in place. For example, if the entity says that they do a calculation, you can recalculate it, right? That's reperforming the calculation itself. So reperformance means that you're redoing the control as it is in place. Okay, now we move to substantive procedures, which is the bulk of mostly your tests or your exams. Remember, your test of controls are also important. So hence I mentioned you understanding the cycle itself, and then understanding the risks within the cycle, and then understanding the controls that must be in place to mitigate the given risks, right? Now, once you understand that, then it's easier for you now to design the controls that are supposed to mitigate the risk that you've given, right? And once you know the controls, it's easy for you to test the control using those verbs: inspect, observe, reperform, inquire, right? It's easy now to test the control that has been implemented. If they say the entity performs reconciliations on a monthly basis, and management reviews these reconciliations and signs as proof of having reviewed these reconciliations, the test of the control can be that obtain these reconciliations, right? If they say monthly, so you need to obtain 12 reconciliations, which is for every month of the year. So there has to be 12 reconciliations which are done. So obtain the 12 reconciliations. That's the first test of control. The second one, inspect this reconciliation for signature of manager as proof of having reviewed these particular reconciliations. Okay, so now we move now to the substantive procedures. Substantive procedures are test of detail and analytical procedures, right? So if we start, let's say we start by analytical procedures. Analytical procedures are your fluctuations, your risk, your ratio analysis. It's your analysis, basically comparing trends, comparing relationships. For example, comparing sales for this year to last year. Performing ratio analysis, which is your solvency, liquidity, and any other ratios that you can perform, right? That you know from accounting one. So ratio analysis are your analytical procedures. These are the procedures that you can perform up and above your normal test of detail. And remember, for every, it's what we call the common substantive procedures or the general substantive procedures, testing analytical procedures. You need to perform every question that says that, give us or describe or formulate substantive procedures, you can start by saying compare whatever particular sales, compare sales for this year to last year, compare sales to debtors, compare sales to credit sales to cash sales, compare sales to total assets. I mean, you can perform any of the ratios that you want to perform. Perform liquidity ratios, perform solvency ratios. That's related to sales. So doing that, compare sales to this year to last year, analytical procedures are part of your substantive procedure that you can perform for any of the sessions that you get given. The next one is your testing of detail. Right. Now, firstly, you need to obtain audit evidence on which to draw conclusions. Your conclusion, obviously, is your audit opinion, because remember, the whole objective of performing an audit is to get to a point where you give an opinion, your audit opinion, whether it's an unmodified or modified opinion. It doesn't matter. So your audit evidence will back up your opinion. So you need to obtain appropriate and sufficient audit evidence on which to base your audit opinion. So firstly, your risk assessment procedures, you'll carry out, obviously, to identify the risk and to reduce the risk to an acceptable level. And you'll perform further procedures, which is a test of control and substantive procedures. Substantive procedures being your test of details and substantive analytical procedures, right? Now, the procedures that you can perform to obtain audit evidence are as such. You can perform these procedures using these keywords. Remember, these keywords, you need to use them. Do not start your sentence with check. Do not start your sentence with ensure. Please do not. You can put your ensure in the middle of the sentence. Start your sentence with either inspect, observe, inquire, obtain external confirmations, recalculate, reperform, or analytical procedures. Please do not start your sentence with ensure. Ensure is the reason, is the why, right? So inspect is how, right? You need to perform inspect. You need to inspect what, right? You'll inspect an invoice, right? You'll inspect a signature of manager. So inspect, observe, inquire, recalculate, reperform. Analytical procedures are part of the further procedure that you can perform. External confirmation, which is a bank confirmation, your data secularizations and all that, right? So remember, don't start with check, determine, consider, or ensure. Be very careful how you formulate your audit procedures, right? So if you start your sentence with ensure, obviously, by starting your sentence with ensure, you indicate to the marker that you don't really understand how to formulate proper procedures. So you need to go back to the basics and learn how to do this. Jackson Stand is a proper book for you to use as a base. Remember, for revenue, the current Jackson Stand that we recommended, revenue has changed. So rather use your knowledge of the ISA in terms of revenue, right? So use your knowledge of ISA, IFRS 15 rather. Rather use your IFRS 15 on your knowledge of revenue and IFRS 16 on your knowledge of leases when you do this substantive procedures. For example, you know currently that IFRS 15 says that, revenue only happens when there's 5 steps. When there's a contract in place, if the contract is valid, if the contract has got amounts and whatnot. So you know those steps. So use those steps to inspect if the contract is in place. As in, did the customer walk in to place an order? Are we now obligated to deliver the goods to the customer in terms of the delivery note? Are we now, having delivered the goods to the customer, is the customer now obligated to pay us for delivering the goods? And what is the amount of the sale of these goods? So what is the amount of this? Does the sale itself has commercial substance? So you need to be very careful in terms of applying IFRS 15 with regards to revenue. So rather use your Jackson Stand in that regard in chapter 10, but apply the principles in IFRS 15 with regards to revenue, and also with regards to leases in chapter 14 Jackson Stand with regards to investment and finance cycle. Rather use your IFRS 16 leases when you apply that. So use those requirements, right? So, and remember that when you examine and test, you will test you on the latest thing, which is IFRS 15. So in terms of our substantive procedures, we'll test you, instead of now applying the risk and rewards having passed to the customer, we'll now look at, is the contract in place, right? What are the steps in terms of IFRS 15? So you need to follow those steps, and you need to make sure those steps were followed to the T in terms of a sale taking place. So as such, we'll apply that. Hence, you need to apply the IFRS 15. So use your accounting knowledge in terms of auditing. Remember, we're auditing what accounting has done, what management has done. Okay. And I did mention that the substantive procedure that you perform need to address the assertions. Now, let's take it back to the basics. What are assertions? Assertions are management claims or management statements with regards to what they disclose in the financial statements, right? You do have accessions for class of transaction and events and the presentation and disclosure of those classes of transaction and events. You do have accessions on account balances. Remember, currently, the accessions do not fall in 3 categories, but 2 categories. It's categories for class of transactions and events, including the presentation of disclosure, account balance, and then accessions for account balances, including presentation and disclosure. And hence, the third bullet of presentation and disclosure rather be within each and every of those 2 categories. So the categories are class of transaction events and account balances. And presentation of disclosure obviously applies to both of those categories. Okay, so I did mention, firstly, can I go back to see what are the sessions? Okay, let's go back. Firstly, you need to understand what are the sessions, right? If I pick up a set of financial statements, right, and I look at the income statement, right, and I see revenue, and I see an amount of 1 million for revenue or turnover, for example. So what management is telling me when I look at that amount of revenue is that all that amount, all the transaction or itself has occurred, that revenue took place. So that 1 million amount that I see on my financial, when I picked up the set of financials, what management is telling me about that 1 million amount of revenue is that it took place, right? What management is telling me is that that amount is accurate. They took the quantity by the delivery note, what they delivered to customer, they multiply by the price per the price list, where they approved the price list, and they took the price times quantity, they took out the VAT, they took out the relevant discounts and any other relevant amount which is related to that, and they multiplied for each sale, and they got to the amount of 1 million, which is what I see on the financial statement. So what management is telling me is that that amount is accurate, right? That's what management is telling you. That's what management is claiming. That's what the statement that management is making about that amount. So management is telling me that that amount, all the sales that are supposed to be recorded in that amount are recorded. So that amount is complete. So all the sales which fall into this year, which is supposed to be included in that 1 million, is included. What management is telling you is that the debits are correctly debited, the credits are correctly credited. So for example, the sale correctly credited and the debtors are correctly debited. So classification. So what management is telling me about that amount is that it's correctly classified. What management is also telling me is that all the sales which relate to this year that's under audit are included, and any of the sales related to the following year are excluded from that amount. So the cutoff is done correctly, right? So that's what management is telling you, and those are the claims that management is making, or the assertions that management is making about that 1 million amount that you see on the financial statements under revenue. Okay. So hence, when you audit, you're trying to prove the claims of management. You're trying to prove the assertions that management is making about that 1 million amount. And hence, your procedures, the way you formulate them, are supposed to address any of those claims that management is making about that revenue amount of 1 million. As in, management is claiming that amount took place. Management is claiming that amount is complete. Management is claiming that cutoff was done correctly. Management is claiming that that amount was correctly classified. So you need to prove the claims that management has made about that, or the assertions that management has made about that amount. And how you do it, you need to perform a procedure in terms of the verb. Remember the verbs: inspect, observe, reperform, recalculate. It's the how. And the source document is the what. So you need to inspect the source document. You need to see source documents. And the why, you need to give a reason to confirm that amount exists, to confirm that the sale took place, to confirm, to ensure. But then that portion, remember that part is part of the sentence and should be at the last part of the sentence. Firstly, you need to inspect a source document to confirm. You need to inspect a source document to ensure. So you need to have the reason why you're inspecting a source document or why you're recalculating. So you can recalculate total sales for the year to confirm if the sales amount is accurate, right, in the financials. Okay. So an example, inspect the minutes of the directors or shareholders meeting to ensure that the transaction was authorized as part of the sentence. Okay. One of the key things that, and what I think the students fail to see, to look at, remember, for you to pass auditing, you need to earn the marks. So start with the easy marks, right? Start with the general audit procedures. Unless the question specifically exclude these general procedures, these procedures will always be there. Every time, on every question that I ask you to formulate substantive procedures, please include all of these as a starting point, right? Remember, all of these are relevant for every assertion, right? So if you think about it, if I obtain a cross-casted, and agree to the balance in my TB, in my Fs, it's valid, right? So you need to make sure that you know this common or the general audit procedure, unless a question specifically asks you to exclude them. Even if a question asks you to perform procedures with regards to a particular session, for example, I can say perform procedures with regards to existence accession of fixed assets, right? You can still agree my balance for the year or my opening balances to last year. You can still agree my closing balances to my schedule, to my TB, and to my financial statements, right? You can still obtain the schedule of my fixed asset, cast the schedule, cross-cast it, and agree the balance to my working papers, right? Or to my TB, or to my GL, my TB, and the Fs. You can trace my posting from my TB, from my GL, my TB, and my Fs. Every time you need to obtain a management representation letter with regards to the session that you perform, or with regards to the procedure that you're performing. So any of these general procedures are easy marks that you can earn, and you need to start there, right? You need to start at the easy marks. And the easy marks first, unless the question specifically says that please do not perform these general or audit procedures, or the general audit procedures are already performed. Please include them, right? You need to consider the effectiveness of internal controls, as this may have impact on the procedures that will be followed. So take this slide, learn this slide, right? And then reproduce the slide when you get to the exam, unless the question specifically says that do not include this. So in any procedure, whether it's revenue whether it's revenue completeness of revenue, that accession, or whether the revenue has occurred, or whether it's payroll, right? You can include this, right? Whether the question says that perform only procedures for the following accessions, you can still include the general audit procedures, all of them, right? So when a question comes and says that perform substantive procedures with regards to the rights and obligations, or the rights of a land and building, right? Perform firstly your general procedures, and then address the right with regards to that building. Okay. Some of these common procedures take differences to a summary of audit differences. Remember, you need to follow up any difference that you find, especially when you're recalculating or reperforming a procedure. Any difference that you find, you need to take it to a summary of audit differences, or you need to go discuss it with management. Okay, that's a mark. Considering your presentation and disclosure, remember, you need to inspect your Fs to make sure that they could properly presented and disclosed with regards to IFRS, all right, and the Companies Act. All right, you need to review abnormal items or exceptions. If it's a positive balance, you need to check if there's any negative balances, right? So you need to inspect if there's any negative balances in your schedule. For example, if I have debtors and I've given you a schedule of debtors, right? You need to cast it, cross-cast it, and agree to my balance in my TB and in my Fs, right? Within that balance of debtors, you know there's not supposed to be any negative debtors. And negative debtors has to be moved to the creditors. So if there's any negative debtors, obviously, considering or reviewing for abnormal items or negative items on my schedule of debtors, that's a procedure that you can consider. Whether any of that session, whether it's a rights, whether it's existence of debtors, whether it's my presentation and disclosure session, whether any of the debtors, whether it's my valuation of debtors, you can include that, right? So, and also you can inspect the minutes of the directors meeting for authorizations. Remember, also considering your memorandum of incorporation for any of the Companies Act transactions, you need to inspect the memorandum of incorporation for any restrictions that can be there in the memorandum of incorporation. So any of the Companies Act transactions, for example, a loan to a director, a loan to a subsidiary, things like that which are coming out of this Companies Act, you know those because you've done TAD 102 properly. So any of the transactions that are coming out of the Companies Act, you need to consider the memorandum of incorporation. That's general procedure. You need to consider any special considerations, which is your special resolutions that need to be in place with that regard. You need to also consider the solvency and liquidity ratios that the directors need to perform before the transaction and after the transaction. And then you need to recalculate any of those. And remember as well, if the company is not, if the company is not solvent and liquid after the transaction has taken place, the directors are trading recklessly, and hence Section 22 will take into effect, and Section 76 and 77 of Companies Act will arise in terms of the directors being held personally liable and responsible. And because of that, you know that's a reportable irregularity. Okay, and hence you can raise Section 45 of the APA. Okay, back to the Companies Act requirements. The memorandum of incorporation, you need to inspect the memorandum of incorporation to ensure that there are no restrictions. inspect any special resolutions that needs to be passed. You need to obtain the director's calculation of solvency liquidity ratios. You need to recalculate that and compare the directors. It's before the transaction and after the transaction. And you need to make sure that terms are fair and reasonable. For example, if they give a loan to a director which does not have an interest rate, which does not have repayment terms, that loan to a director is not fair and reasonable. And as such, the director approves such a loan. Any director party to that will be held personally and severally liable in terms of Section 75 and 76 of the Companies Act. And because of that, you can now raise a reportable irregularity in terms of Section 45 of the Companies Act. All right, so you need to obtain, or you need to know these general procedures and any of the procedures that are coming out of the Companies Act, right, which is those 5 requirements in terms of the Companies Act. Okay, and also you need to consider any tax implications with regards to the procedures that you're performing or the transaction that you're auditing in that regard. Okay, so a way or an audit or an exam technique in terms of how substantive procedures can be asked. When I can ask reconciliations, a working paper, we can give you information in the scenario, pertaining to a specific item. We can ask you general entries, which you'll find the next test, for example, general entries. We can ask you to audit the general entries. You can see compilation of audit program, integration with other topics such as Companies Act. I've mentioned the requirements in terms of Companies Act that you need to know. So you need to know those requirements in terms of that are specific to the Companies Act transaction, a loan to a director, a loan to a subsidiary, those type of requirements or those types of topics out of the Companies Act. So that's the portion when we talk about the integration and application. Okay. And with regards to the procedures, remember as well that when you're performing your procedures, you need to really address your assertions. So we'll get to that. So before we get to that, let's talk about the early verification. Early verification, obviously, is you going in the entity, and normally you perform early verification when there's a tight audit deadline. Obviously, that will be guided by your risk at the overall financial statement level or a risk at the F's level. So a tight audit deadline that is in place that you can perform early verification. Early verification, that means that you go early to perform the procedures and then you roll them forward. For example, if the year end is January to December, right? If your financial year is January, year end being December, right? So you can go in at September to perform some of the procedures. Remember, in September, the transactions are recorded already. So you can perform procedures on revenue up to September and then roll it forward to year end when you come at year end to perform the other procedures. So you don't have to wait to come to the entity after year end to perform some of the procedures. You can go early to perform early verification and then you roll them forward to year end. And then you come at year end to do the last 3 months in the example that I'm giving. Okay. In this instance, obviously, if you have time limitation on the tight audit deadline, and also to reduce pressure on your staff in terms of the auditing staff. Okay. What I noticed and what we've noticed over the years as we're marking our exam papers and tests is that the common mistake the students make, they make the following common mistakes. For example, they don't formulate their procedures properly. I mentioned earlier about starting your sentence with ensure. Right, that's not a proper formulation of an audit procedure. So if you start your procedure with ensure, that will not be marked correctly. You'll be marked wrong. All right. The other one is that students do not formulate or they formulate generic audit procedures without making it applicable to the scenario. I mentioned that you need to know what's in the scenario, right? The amounts in the scenario that we mentioned, the dates in the scenario that we mentioned. If, for example, you're looking at an entity having sold a building, there needs to be an agreement. Then the agreement will be in place in terms of if we sell a building, right? On the agreement, in the scenario, will tell you what is the amount. So when you inspect the agreement, inspect the amount and mention the amount that we mentioned in the scenario. That's application. Right, you'll obtain the agreement, you'll inspect for the amount to be the specific amount that we mentioned in the scenario. If in the scenario we said the entity sold the building for 50 million, so when you inspect the agreement, you inspect the amount of 50 million per, that should be in the agreement that we've mentioned in the scenario, right? So when we talk about, when we say apply your, and do not only formulate generic audit procedure, apply to the scenario, we mean in terms of that regard, where you inspect the signature. Right, you need to inspect the signature of the entity, which is what we've given you, XYZ Limited, right? Inspect the signature of XYZ Limited or representative of XYZ Limited, and together with the signature of the buyer, which we also mentioned in the scenario, right? So that's another thing that you need to inspect. You need to inspect the date in the contract or in the agreement, right? The date would have mentioned that the entity sold the building on the 15th of January or 30th of January. So inspect the date that is 15th of January per the agreement, right? So that's what we mean by saying apply your audit procedures to the scenario. So you need to make it applicable to what we've given you, the information that we gave you in the scenario. Make it applicable, right? And also the other common mistake that we found that students do not earn the easy marks. They do not mention the general common procedures. If I mentioned earlier that if I ask or the question asked or the examiner requires that you perform procedures for a specific session, it does not mean that you do not have to perform the general or the common procedures. You need to perform those procedures. I mentioned a slide earlier, which is our common procedures. These are the common procedures. So mention these, right? Unless the question specifically says that do not mention these, please do mention them. Otherwise, if the question does not, please address these general or common procedures because these are the easy marks that you can earn, right? You get a question asking about revenue, 27 marks. Most of the marks are sitting here in the common procedures. So you need to know these common, or you need to list these common procedures and describe them as such and make it specific and applicable to the scenario, right? So others that you address only one issue. For example, you might be focusing on the quantums of revenue and not also looking at the accuracy, the cutoff, and the likes of revenue. So you need to mention that. The other one that we found, the common mistake, is that students do not manage their time properly. So bad time management. Remember, we give 1.3 marks for every 1.3 minutes for every 1 mark. So you've got ample time to write 1 mark. So if a question is 10 marks, write at least 10 points and make sure that you keep to the time. The other thing that I normally advise students is that when you facing a question in the paper, remember the 200 mark question. There's different sections. Do not get stuck on one area. I know you can say that you remember that you've seen this before, you try to remember what it is. Do not waste time. Do not get stuck on one question. Move on, right? At the end of the exam paper, you can come back to address that particular question that you've left behind. So if you get to a question you can't remember, or you get stuck, or you get a mind block, move on. You'll find that other questions will just juggle your mind and you might remember. You juggle your memory and you might remember and come back to that particular question that you've left. You do not have to follow the sequence that we've given you in the exam paper. You can write 2A here, 2B there, 3, 4 here and there. You don't have to start question 1, question 2, question 3. You can skip the questions around, just like that. So as such, I'm saying that do not get stuck with one question, move on, manage your time properly, keep to the time limit. If the question is 10 marks, it means that it will take you 13 minutes to complete that question. So take 13 minutes on that particular question, allocate the time to every other question. If a question is 20 marks, do not spend 5 minutes on that question. You need to spend at least 26 marks to 30 marks on that, 26 minutes to 30 minutes on that question. And remember, if it's 20 marks, that means you need to write at least 20 bullet points and write in bullet form, write legibly, write in a handwriting that we as markers can read. So write properly, and then you don't have to keep everything on one page. You can use all the pages on the books that we give you in the exam. You can write in more than one book. You are allowed. I know some people, they squeeze their writing to try to squeeze their solution into one particular page or into one book. You do not have to. You can use multiple books. You can use 2 or 3 books in the exam. You are allowed that. So write in bullet points, skip a line if you have to here and there. If your writing is not as clear as mine, skip a line after every bullet point and write in bullet points. As you see this slide that I've put up, you see it in bullet points, right? Also write in that way. Writing in bullet points, you force the marker to look at every bullet alone, individually, right? You're forcing the marker to look at every bullet point individually. And if you have to, if your writing is not as clear, skip a line after every bullet, right? And use more books if you have to. You do not have to stick to one book. The other thing that we found that knowledge of the cycle are insufficient. I mentioned earlier on that Jackson and Stan described the cycles very nicely. And it goes in detail describing the cycle and documents within every cycle. At the beginning of every cycle in Jackson and Stan, from chapter 10 to chapter 14, right? Chapter 10 being revenue, chapter 11 being payments, purchases and payments, chapter 11, 12, 13, and 14, finance and investments, right? In every cycle, the beginning pages describes properly the cycle that goes on into revenue. If it's purchases, what is the purchase cycle? And it describes the documents within that. And it lists the risks within every function within the cycle, and also the controls that must be in place. And later on, discuss the substantive procedures. So you need to go back to those basics of learning again your Jackson stand and reading those particular cycles. So you need to learn the cycles, right? And knowing the cycle and knowing the documents within the cycle will help you in terms of your formulation of audit procedures. All right. The other thing that we noticed that students battle to link their audit procedures to the relevant sessions. What the students do is that they memorize particular sessions. They do not know which session or which procedures goes to which session to address with which session. So with regard to a session, you need to understand and go back to the very basics. Learn what does a session mean? What does the accession mean? What do we mean by saying occurrence? What do we mean by saying occurrence? Occurrence means that the transaction took place, what and was authorized. What do we mean by saying that a transaction has taken place or was authorized? We mean that the customer went into the building, filled in an order form, one document. We prepared a picking slip sent to the warehouse. Second document, picking slip. The warehouse packed the goods and they delivered the goods to the customer, deliver note, right? From the deliver note, we prepared an invoice. The invoice has the price, the quantity per the price list, approved price list, the VAT, and the discounts, right? So what do we mean by the sale took place as occurred? We mean that we can trace back to where the customer walked in and placed the order. So we can inspect the order form as proof that the customer walked in and placed the order. We can inspect the picking slip as proof that we packed the goods to deliver them to the customer. We can inspect the delivery note as proof that the customer has received the goods, signed by the customer, obviously. We can inspect the invoice for the quantity by the delivery note, the price by the price list, the VAT that is properly calculated and taken into account, the discounts that are properly taken into account. So you can inspect all those documents to prove that a sale took place. And you can inspect any of those documents, that order form that was properly signed as proof of authorizing the sale, right? You can inspect the signature delivered to the customer as proof that the customer has received the goods. So when you look at occurrence, do not just look at inspect supporting documentation that the sale took place. No, inspect what, right? Which documentation are you talking about? The order. Inspect the order as proof that the physical customer who has an account holder walked into the building to place the order, right? Inspect the order form for signature of a manager approving the sale. Inspect the picking slip as proof that we packed the goods out of the warehouse to deliver them to the customer. Inspect the deliver note as proof for signature of the customer as proof that the customer has received the goods, right? Inspect now the invoice that we prepared after obviously having compared the three documentation, which is the control that we must perform. Inspect the invoice for what? Firstly, for the quantity. The quantity must agree to the quantity by the delivery note. For the sample that you've selected of sales, the quantity on the invoice must agree to the quantity on the delivery note. Delivery note is properly signed by the customer as proof of having received the correct goods, right? Inspect the price on the invoice. Agree that price to the price by the price list. You have a master file of the price list which is approved, so therefore you can agree the price to the price list. Now you can look at the VAT portion. Was the VAT properly taken out of that sale? Before recording of that sale, was the VAT taken out? Discounts, are there any discounts on the invoice? Do you see now, we're moving from having a one-liner of proving occurrence of a sale to look at multiple things, right? In that way, and if you looked at all those documentation, and if you inspected all those documentation, all these things have happened, you've proven that there's a contract in place with the customer, where the customer is obliged to pay, and we are obliged to have delivered the goods, right? And the way you can also, by looking at the price by the price list, that you've proven that this contract has commercial substance. So you've proved all those requirements as per IFRS 15, just by looking at all those documentations. Okay, so you need to address all those documentation. So you need to know what does the accession occurrence mean itself. What do we mean by completeness? What does it mean? It means all the sales that are supposed to be there are there, right? What do we mean by cutoff? It means that the last delivery note of the year, which is dated for the year, the last one has the date on it. So you can look at all the other orders delivered notes which are done just before this one, that they dated within this year. You can look at the one post year end to make which are dated after year to show that they're not recorded this year, they're recorded only in the following year. What do we mean by classification? What we mean by classification is that the debits are recorded as debit, as in we debited debtors or bank and cash. The credits are recorded as credit, as in we created sales. We did not debit bank and cash and create liability where a sale took place, and there's a valid contract of a sale, right? We debited bank and cash or debtors, we created the sale. So as such, that's the classification. So you need to trace your posting to make sure that debits are recorded as debits, and credit, which is data as bank and cash, and credits are recorded as credit, which is your sales, right? They're properly recorded for the sample that you've selected, obviously. So you need to understand each and every cycle itself. So if you look at the balance sheet assertions, what do we mean by the rights or obligations? The rights is that the entity owns a building. The entity owns the particular whatnot. If it's a building or land of buildings, obviously we'll have an ERF number, and the registration of that land of building is done with the title deed, with regards to a title deed, which is sitting in the deeds office. So you can perform a deed search and then inspect that the name of the entity is recorded on the title deed as the title holder. And that way you're proving that the entity has a right to it. In terms of a loans, whether it's a loan to a director or any other loan that we've made, you can inspect the agreements that are in place. And inspecting that the name of the entity, it's on the agreement, is proof that the entity is now obligated to pay back that loan. So that's how you address your, so understanding the particular assertion itself, understanding what that assertion means, will be easier now to formulate procedures in addressing that. Okay. So also, other things or other common mistakes that we find with students, that students do not integrate properly, they don't perform integration properly. I mentioned earlier about integration with the Companies Act and the requirements by the Companies Act. See, I like the Companies Act because it's the easiest to apply, because the requirements are there in the Companies Act. The memorandum of incorporation should not have any restrictions with regards to the transaction. Solvency, liquidity, special resolutions, right? Before and after the transaction, also actually, special resolutions, right? That the terms might be fair and reasonable. Those are the requirements by the Companies Act. So you need to address them. You need to inspect the memorandum of incorporation to ensure that it does not have any restrictions to this transaction. You need to inspect the special resolution. You need to inspect minutes where the directors have approved this transaction, and the capital budgets that are there, or the plans that the entity has, right? You need to inspect the calculation that the entity performed for solvency and liquidity. You need to re-perform that calculation, and you need to confirm your calculations, what the entity has done, and you need to follow up any differences. Those are marks, right? Those are marks, easy like that. Okay, so you can inspect the terms that are fair and reasonable based on the market, right? If it's a loan, does it have an interest rate? Does it have repayment terms, right? Those are the indications of fairness of a transaction. What does the market say? If a loan on the market goes for 10% and we've offered someone a loan at 2%, that's not fair and reasonable, right? Because the market is at 10%, so we must keep to what the market says. Okay, so the last thing was classification of financial statement items. Okay. Test of control versus substantive procedures. I think I'll leave that one for you to see. That being said, the slides are on my UNISA. Any of these slides are on my UNISA, right? So you can go to any of the, go to the discussion classes. You'll see that the slides are loaded on my UNISA. Okay. So I mentioned earlier the assertions, and I emphasize the assertions. I like to use the keywords. For example, I use the keywords VEC to the power 3. So VEC meaning validity, accuracy, cutoff, completeness, and classification. So that's the keywords that I like to use to remember the assertions. And I did mention that you need to know what each and every assertion means. So the V, which stands for validity, means that a transaction has occurred and was authorized. So my V will be in this regard, occurrence. So what does occurrence mean? It means that a transaction took place and was authorized. And then you can trace to the source documents, all right? Obviously, these are the class of transaction. Accuracy means the recalculation. Remember as well, when you perform recalculation, say for example, in terms of revenue and its accuracy, when you reperform the recalculation, do not just reperform the recalculations and leave it at that. Reperform the sales for the year, compare to the sales recorded in the book, follow up differences of management. So that's 3 points. And then in your recalculations, you need to obtain a sample of invoices to trace your quantity to the delivery notes, to trace your price to the price list before you can recalculate that invoice and recalculate the amount per the invoice. So quantity per the deliver note, price per the price list, and then recalculate the sale for the year. The VAT portion, recalculate the VAT on the sample of the invoices that you picked up. That's also accuracy. If the VAT is listed now at 14%, remember in South Africa, VAT has changed now to 15%. And if the invoice still refers to a VAT at 14%, that invoice is not accurate. So as such, when you recalculate that amount per the invoice or the sales amount for the year, you need to make sure that you've recalculated the VAT correctly at 15% and no longer at 14%. So when you pick up your invoices, you recalculate the invoice by taking the quantity from the deliver note and the price from the price list, get the total, which is VAT inclusive, and then exclude the VAT at 15%. Exclude any discounts which are there, right? So you can recalculate the VAT, recalculate the discounts, get to the net amount, compare that net amount to what the entity has recorded for that sample of transaction. So that's recalculation. So the accuracy portion is no longer just addressing recalculate the sales amount for the year and leave it at that. So you recalculate the sales amount for the year, compared to what's recorded, follow-up difference to management. In recalculation for sample of invoices, agree the quantity to the deliver note, agree your price to the price list, recalculate the VAT portion, recalculate discounts, get to the net portion, agree the net portion to what's recorded in the books. Do you see now we're moving from accuracy of being 1 or 2 marks to now accuracy you're hitting about 6 marks. So those are the easy marks that I mentioned that you must address. So if you look at cutoff, for example, let's take the cutoff assertion. So cutoff, what does it mean? You can take the last delivered note. Remember, a sale would have taken place on delivery of the goods, and the customer signed the delivery note. When signing the delivery note, the customer has acknowledged his obligation to pay for the goods that they have obtained. And that's in that regard, you can say the sale has taken place. And those requirements are being fulfilled in terms of there being a contract in place for a sale to be fulfilled. So on delivery of the goods, and remember there's order forms before that, there's the order which was placed at the picking slip, now we're delivery, right? So you can pick the last delivery note for the year, right? And you inspect the date on it. The date obviously should be within the year end. If we have a year end of 31 December, your last delivery note for the year, let's say for example it's on 28th of December, that's the last delivery that we've made for the year. The last delivery note says that. Remember as well that your delivery note, which is sequentially numbered. So you can check the sequence of it. Pick the last delivery note. Look at the net. The date says 28 December. Discuss with those on the floor and says, this is the last date, or the guys in the warehouse, is this the last date that you made the delivery? Sharp. Now that you've addressed that, now you can pick delivery notes around that year end, in the week. So you can pick a sample of about 20 orders which are attached to, and every order needs to have a delivery note attached to it as a fulfillment of delivery. So you can pick orders which have delivery note attached to them around this year end, a sample of say 20. Inspect the date on it. If these delivery notes which are attached to the order are dated within this year, right, they need to have been recorded in the year. So you'll trace that posting to that these delivery notes are recorded in this year. If any of them are dated after year end, they need to be excluded in the recording of the sales amount of this year and has to be recorded in the following year. In this instance, you've proven that the cutoff was done correctly, right? Now you go to post year end. You select a sample of say 10 of those order forms which are attached to delivery note, and you inspect the dates on it. Obviously, if the orders are placed after year end, delivery is supposed to happen after year end. If any of those things are dated after year end, they need to be recorded in that following year. If they're recorded in the current year, therefore there should be something, a breakdown in the controls in terms of delivery and recording. So hence is that in that instance, you've proven your cutoff. Obtain the last delivery note, select a sample of 20 orders, trace to the delivery note, trace the delivery note, inspect the dates on the delivery note. For any that are dated within the year, ensure that they're properly recorded in this year. For any which are dated after year end, ensure that they're properly excluded from the recording in the sales amount of this year, and they're only recorded in the following year. Inspect a sample, or obtain a sample of orders which are placed after year end. Inspect the following the accompanying delivery note. The dates on the delivery note, if the dated after year end, is supposed to be recorded after year end, excluded in the current year recording. In that way, you fulfilled your cutoff. And your cutoff is no longer just 1 mark, it's now moving to about 6 or 8 marks. You see how you can easily earn marks. Completeness, obviously, with regards to completeness, you can perform your analytical procedures. Compare this year to last year, right? To ensure that nothing is missing, right? You can inspect the sequence or perform the sequence of your documentations to make sure that none is missing. So check the sequence of your documentation, check the numbers of it to ensure that none is missing, right? So you can inspect the sequence, or you can reperform the sequence check to make sure that none of the documents are missing. You can compare the current year to last year and perform ratio analysis in that regard with completeness. Classification, you can trace your posting, right? From your trial balance, from GL to your trial balance, from your trial balance to your Fs. And remember, with regards to PPE, for example, I mentioned this in Cape Town earlier, that when you trace your posting, with regards to PPE, or with regard to assets or liabilities, or with regards to financial statements, the balance sheet portion, or statement of financial position. When you trace your posting, do not just trace your posting from the GL to the TB and to the Fs. To the Fs, it goes to the Fs, the notes of the Fs, right? And in the note, you need to cast the note, right, to get the amount. And that amount must agree to the amount in the front of your financials. Remember, with regards to PPE, in the front of the financials, you have one amount. The breakdown of it is sitting in the notes, right? So you need to check the breakdown of it in the notes. And remember as well, with regards to PPE, the documentation that comes just before the recording of this, the fixed asset register, which a lot of people fail to address. Fixed asset register needs to be cross-casted and agreed to the financials, right? Agreed to the GL, to the TB, and to the financials, the note in the financials. And that note in the financial needs to be cast, and that needs to agree to the face of the financials, right? So it needs to be tied up to the financials. So the tie up of the note to the financials is also a key procedure that you can perform. Okay. Now I've already jumped to addressing the balance sheet. So as such, with regards to the balance sheet, remember, if you look at the valuation in that regard, it should be accuracy, valuation, and classification, not just accuracy, not just valuation, right? So when you look at those assertions, I think we left out that in terms of valuation, it should be per the new ISA 315, accuracy, valuation, and allocation. And there's also classification with regards to balances, right? And the presentation and disclosure in that regard. Completeness, have all that has been included? Do we have all the buildings in place? Existence, do the data exist and are not fictitious? Remember, by secularizing or performing data secularization, you're already addressing that the data exists, that the entity owns the data, and the amount that's supposed to be recorded, or the valuation thereof. And with regards to valuation, remember to address using an expert. And one of the procedures that you need to perform when you use an expert, either the entity will use an expert or you can use an expert. And whenever you use an expert, make sure that the three things are addressed in the expert. For example, did you inspect the competence of the expert? Inspect the qualification of the expert. So address competency of the expert. So competency is the first thing in using an expert, right? Whether management expert or whether auditor expert. So competency of the expert. Is the expert properly qualified to perform this valuation, right? In terms of the building, for example, you normally use an expert to perform valuation or to obtain a value of the building. So management normally perform a valuation using an expert. And you can also look at the qualification of this expert. So inspect the qualification of the expert to ensure that they're properly competent in performing the valuation. So competency of the expert. The next one is the independence of the expert. You can discuss with the expert if they are independent of the entity, and in fact, how do they obtain the contract to perform this valuation from the entity? Who do they know in the entity, right? So independence. You can also discuss with management if the expert is independent of management, right? Or the expert, how do you find the expert? Is it independent of the entity? So you can ask the expert to indicate in that regard if they're independent. So the first one, competence of the expert. Next one, independence of the expert, right? The last one, you need to look at the reasonableness of the assumptions and the data that the expert use to arrive at the valuation amount, right? So obtain the data that the expert use, obtain the assumptions that the expert use, and inspect if they are reasonable, right? Assess the reasonableness of those data and assumptions. And if the expert use any of the assumptions, remember assumptions can be recorded as key audit matters on your audit report. So you can address the assumptions as key audit matters on your audit report. Consider including the assumptions as key audit matters on your audit report. So firstly, the key three things that you need to assess: competency, independence, the reasonableness of the data and assumptions that the expert use. So with regards to using an expert, you normally use it for valuation, whether it's a building, whether it's a liability, whether it's a PPE. So any of the PPEs, you can use an expert to do the valuation in that regard. Remember the presentation and disclosure in that regard. And also with regards to accuracy valuation, you can recalculate any of the balances that are given unto you and compare to what management or the expert has disclosed, and then follow up differences with the relevant managers, or take out the differences to the overs and unders, or summary of audit differences. Okay, so your completeness, existence, rights and obligation, accuracy valuation, allocation, classifications, you're recording, trace your postings, right? Debits are recorded as debits, credits are recorded as credits, and presentation and disclosure. And that will be all your things. I think we gone 10 minutes or 30 minutes above time, and hence I will end here. Quick question. Remember the common procedures. I've mentioned there in the screen that you're seeing in the screen that's coming up now in the slide presentation. Remember, when you get a question, which in this regard, this is the question that was asked, and this is the required. Describe audit procedures or formulate substantive audit procedures as other income received, right? Obviously, you'll consider effectiveness of controls. I mentioned that mentioning the common procedures first is key, unless the question specifically requests that you exclude it. Consider effectiveness of internal control, obtain signed management and representation letter, perform cost and casting, agree to the financials. So look at the common procedures first. Obtain external confirmations, perform analytical procedures, right? And the last thing that we need to touch on, I mentioned that CATS obviously is using the computer to perform the procedures, right? So use CATS wherever you can. You can use CATS to recalculate. You can use CATS to select a sample, right? CATS will be easier to calculate your sales for the year without you doing anything. It can be done in a day. If you have to go to every invoice, take the price, take the quantity, multiply the VAT out and whatnot, it will take you forever to even complete the audit. But you can use CATS to perform that. You can use CATS to exclude the VAT out of your calculations and calculate the VAT portion of the transaction for you. The CATS is the computer, using a computer to assist you in performing your audit procedures, right? So remember as well, the CATS, very relevant that you need to use, especially if you're AUE4862. Remember to use CATS, all right. Exam technique, obviously, identify the transaction, the requirements, accounting journal entries, develop audit procedures using accessions, okay. In that regard, we are at the end of this presentation. Your questions and your answers can be sent through. You can post your question and answers and we'll try to answer them. Remember, we have until the 12th of June to answer any of the questions that you have. Any technical questions, obviously, will take us a while to come and answer those technical questions. But the ones which you can answer immediately during this presentation, I know Ziad is busy answering those questions in the background. So thank you for attending. Thank you for tuning in and for seeing this presentation live. Thanks a lot. And good luck with the next test. Good luck with the exam. Bye.